Tuesday's 0.5% rate hike by the Reserve Bank of Australia was a huge one, in fact the biggest single rise in 22 years. Our next guest reckons it's too much in one jump and is accusing the RBA of acting too late on interest rates. Good evening to property expert Garth Davis. You're critical of the RBA's handling of this. Why?
We feel that the rate hike is too big in one hit. We obviously had our first movement upwards in 12 years last month, and then to suddenly come with a double whammy, it reeks that they didn't have their finger on the pulse and reacted and have overreacted.
Garth, you say that this hike will be felt more on the east coast, that Perth is better protected. How is that the case?
Well, the eastern states markets, particularly of Sydney and Melbourne, have had a very strong price boom over the last 2 years due to the cheap money and interest rates of COVID. In Perth, we still haven't had those big, strong increases. In fact, we probably on par or slightly where we were below in our peak of 2015. So we are a lot more resilient because we haven't had that really strong growth on the back of cheap money.
We have a viewer comment for you, Garth. Andrew Craig writes, Perth's boom is over. Welcome to the bust. But Garth, you say the Perth property market hasn't boomed yet, so delve a little bit deeper into that for us.
Okay, well, our prices here, as we sit in 2022, we're on par, if not slightly behind where we were in 2015. So it's all about cycles, and at the moment where we sit in the cycle, the fundamentals are fantastic for Perth. In fact, it's the best capital city in Australia if you were looking for investment, because we have such low vacancy rates, the rental yields are very strong, cash flow positive properties, the supply of stock is really, really low. So all the fundamentals point correctly. And what's important to factor in with property is to actually take out the noise. The interest rates were coming. It's just what we've got a gripe with is it came too large.
Nonetheless, it's not really great news for first home buyers, is it, or those who are wanting to downsize?
Yep. It's a really difficult time now also for the first home buyers, because what's really happened here is that the confidence it's going to make people just stop and try and weigh up what's happening in the market. We will probably have another big rise again next month, which again we don't think is the right way to try and control the markets, particularly around property. And what will happen is you're just going to take buyer demand out. They're going to sit on the fence for a while and just let things settle down a bit.
All right, we have some more viewer questions for you, Garth. Scott Buchan says, I'm keen for my son to buy an investment property in Perth. He still lives with us. Is now a good time to buy given the rental market? And do you think Perth prices will come closer to East Coast prices with the interest rate rises having more of an effect on the market there?
Okay, I'll answer the second part first. So I don't know if we're going to get quite up to the eastern states markets price-wise, because they've gone up really strongly, but we will have increase here. It is a great time to be getting into the Perth market, and especially probably in this next 3 to 6 months, while a lot of the competition and buyers might sit on the fence and just want to watch and see what's happening with this interest rate hike. Where will it get to? And they might sit on the sidelines, which creates opportunity for the right people that can see through the noise and see the opportunity for themselves.
Baron Holstein agrees with you, Garth, that the RBA reacted too late and says, and now they're moving too slowly. This will drag the economy down for a long time.
Yeah, look, it's an interesting one. I think what's important here to know is I think everybody knows that the rates have been extremely low, artificially low to help us through the COVID times. And we do need to get back onto that long-term trend average of about 5%. But it's also about how to do that and without upsetting the confidence in the market, because it's a very delicate thing, what's actually happening in the street with mums and dads, with people renting, with people buying, with people paying mortgages. So we just believe that it just needs to be handled with care, whereas probably the economists are just going really hard, really quickly, and they're trying to stop this inflation train.
Very quickly, you mentioned 5% there. Do you see that happening by the end of this year?
So where we see the market going is, yes, the fixed interest rates are ready. If you want to go fixed rate, they're around about that 5% already. So we're going to have, and remembering that's the retail rates, that's what us mums and dads will be paying from the bank. And around the end of the year, first quarter next year, yes, the Reserve Bank would really like us to be back in that space of a long-term trend.
One more question for you. Thomas Trembath writes, I think we need a little inflation. Currently, the average Australian has far too much wealth, especially in their property.
Yeah, and again, I suppose it just depends on where we're targeting that. So People sitting in Western Australia, I think we're going to see out this pretty well. There'll be a little bit of caution, people sitting on the sidelines to watch. Where we do see the damage being done is if you own a property in Sydney or Melbourne, and the value is going to come down just because there's going to be less buyer demand, you wouldn't feel too good if your property prices are coming down and your own family wealth is coming down. So it's sort of horses for courses, but it's a normal cycle with these interest rate movements.
Garth Davis, it's been good to speak with you this evening.
Thank you so much.